So what do you make of the action that we're seeing in the futures? I mean, we were down earlier, not down big, down about 0.25%, but we continue to kind of just move higher throughout the morning without any news or any real reason.
Well, I think the direction of the market has been higher. We've seen a V-shaped recovery since the lows of April, and I think you've seen pretty good, solid economic data. We just had the Fed policy meeting and announcements on Wednesday, and there was no change as expected, but they did lower their GDP forecast, and they did raise their inflation forecast, which is the second time this year. So I think but right now, we're on hold. We're waiting and to see what happens in terms of the tariff flow through, because I think there's a big expectation that there's been a lot of pull through forward buying that's going to be worked off, and we should start to see it in the numbers. But at this moment, the investors are expecting that there will be some impact, but it's pretty much been discounted in the market. We've recovered a lot since the April 2nd announcements that appear to be just intolerably high.
So your word of the day is patience. And so, the Fed's obviously trying to stay patient. They're trying to figure out the impact of tariffs. The president's very unhappy about it. What do you think about the market? Is the market just being patient, hoping for those rate cuts? Do you think the market's a bit rattled by the idea that the rate cuts, while they signal for two, even Jay Powell said take it with a grain of salt, and it doesn't seem to be a clear path?
No, I agree. I think I use the word patience because it's not only about the Fed, because they are waiting to see. They've been very clear. Look, we don't know, the balance of risk, how it's going to change, if it changes in terms of jobs versus inflation. And so you're waiting. And I think right here, what the market has had, as I mentioned, this big V-shaped recovery where 22 plus times earnings. That's historically pretty high. And so there's not a lot of upside. We don't have any immediate catalysts. Yes, the tax package is going on right now, but a lot of that is just extension of tax cuts. And right now, the Iran-Israeli conflict seems to be contained. It seems regional. Even if we do decide to move, it's probably not going to have a major impact. So I think the market will just be chopping about here. You could see people are looking for the laggards, where to go, any pullbacks and great names people would be buying. But, there's not a lot of upside action, I think, in the near term. But then again, not a lot of downside until we get more data. And we have to see where the risks are. Is there a risk to the upside or the downside?
All right, I want to get to your pick because we're almost out of time. It's the GLD. So we were just hitting this earlier. Gold's actually down this week, but year to date, you look at the GLD, it's up big. It's up over 26%, but been a bit range bound over like the last week or so, even though we've seen a lot of geopolitical tensions. I'm going to put it like that. Are you surprised by that? And do you think it's still a buy, or do you think it might actually have just kind of hit its level of resistance when it comes to gold, at least for this period?
Yeah, well, Frank, that is the right question. I think in the near term, it's probably had a bit of a run. Like anything that's had a big run, it should pull back. But I think there's been some real structural changes, in gold. And right now, gold is reacting in classic fashion to fears about the economy, geopolitical concerns, inflation, et cetera. But I think the structural change has been central banks really buying more gold. In fact, one of your previous guests, when he was talking about the dollar, talked about since '01, the shift in foreign currency reserves out of the dollar from 71% of holdings to 57%. And where is it going? It's going into gold. And that was really given a big upshift in 22 when Russia invaded Ukraine and their $300 billion in their foreign reserves were frozen, right? And so a lot of other central banks said, hey, wait a minute, this could be us next time. So you've seen emerging market central banks increase their buying by 5 times every year. And so that trend is going to continue. And you will have moments right now where it's up because of the uncertainty. It'll come back. But I think there's a longer term trend. And I think, you can have gold as a core holding in your portfolio because of these changes. Plus, you have competition from the GLD, from the ETFs going after and buying the same gold.
One last quick question, then we got to get out of here. Cybersecurity, what's your take on it? We were just talking to a cybersecurity CEO just a bit ago, just talking about the sophistication of Iranian cybersecurity professionals, some incidents involving the U.S. and other nations and hacking when it comes to Iran in recent years. And then you look at the chart here, since quote-unquote Liberation Day, the CIBR cybersecurity ETF up double digits, well outpacing the S&P. What's your view on cyber right now?
Well, I think your previous guest is spot on. The need will only increase, and this current environment highlights. And I think he's right about modern warfare, where it's going to happen, where we should be concerned. And so I think that's a secular theme in the portfolio. Names like CrowdStrike or Palo Alto, and there's a whole host of other names. But right now, those are the leaders, and they should be core holdings in your portfolio because of that. These threats will only get more sophisticated and more intense.